What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is October 28th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to spend some time to talk about why it is a make or break moment here for Bitcoin. After over 7 months of sideways consolidation, coming up here on nearly 8 months of sideways price action, we've slowly been establishing higher lows and higher highs. Bitcoin has been able to reclaim the 21 days support, and now as we face the common level of resistance between 70 to 74K, it is time for the bulls to show up in a big way. We're going to be talking about all the major things you need to keep your eye on, as well as what's going on in altcoin markets and in the macro scene, so we can be best prepared to understand how to navigate the situation no matter how it plays out. We got a lot to unpack here, so if you guys enjoyed the video, consider dropping a like. It's one of the greatest ways you can support the channel, and let's go ahead and kick things off. So I want to start here by talking a little bit about what's going on here with price. As I mentioned at the beginning of the video, I don't want to linger on it too much, but as you guys know, every single week we come back here on Monday and we're reviewing how price is reacting with the moving averages, how price structure is looking by its own, and what we find is that Bitcoin has reestablished an ascending trend. We have higher lows, higher highs. It's nothing incredibly significant just yet, but we can see very clearly here, if we just take a look at the last couple of months, the trend was generally to the downside with lower highs and lower lows. We have now flipped that to some extent, and we started turning moving averages, which were starting to act as resistance, into support once again. Again, a positive sign here that the trend could be starting to reverse and setting up the foundation for an uptrend, which is what we hope to see. Because if we can get Bitcoin up to some target like we've talked about, we've been open to the idea that Bitcoin could go up to around $90,000 in this cycle, which I know is not as probably parabolic and as exciting as a lot of people are expecting. But again, we're trying to reach in the middle here. We do believe there's upside potential. We just want to make sure we keep it conservative and know when to take profits. At the same time, while that's not incredibly exciting for Bitcoin, it is important to not only denote that this is going to be, if we get that 90K price tag, a nice 30% plus rally for Bitcoin, which in a short window of time is going to outperform probably most major asset classes, especially the broad indices. But beyond that as well, if that does play out, there's obviously going to be a lot of opportunities in the altcoin space. But before we can even talk about that and the kind of return potential that there could be in those plays, we need to take a look at the numbers here, because the ETF inflows for the past month, we haven't even come to the close of the month here, have been actually really good. We've got another week here before really the entire overall monthly figure is going to be done, but we've already added roughly, give or take, around 45,000 Bitcoin in the past month. That is exactly what we want to see. It's no wonder why Bitcoin, not only Bitcoin's price is going up, but also Bitcoin dominance, which we'll talk about in a moment, because right now the inflows are heavy into Bitcoin. This is what we want to see on a monthly basis. If the ETF inflows keep up above 30K on a frequent basis, and ideally maintaining that 40 to 50K range on a month-to-month basis, you've easily got the foundation. If that can maintain for the next couple of months, that can easily bring Bitcoin up to the 80, 90K range. No doubt about that. So it's important to see those numbers continue, because sometimes it's been a bit spotty. We've had neutral months, we've had sometimes negative months in the Bitcoin ETF. Or at a minimum months where generally, because of those outflows, it's just really not that impressive. We get a couple thousand Bitcoin. When you consider the government outflows or Mt. Gox, really net overall institutional flows end up being negative. And that's really what happened for the past couple of months. But this is very good to see here. These kind of double-digit tens of thousands of Bitcoin being purchased each month is exactly what we want to see. However, we've got to talk about the state of altcoins here, because while altcoins are obviously higher from their capitulative lows back in August, what we see here is that altcoins are still struggling to get past other coin market cap, which is taking all the other cryptocurrencies, excluding the top 10 from Bitcoin down to some of the major altcoins like Ethereum and Solana. We're excluding those, really looking at the altcoin market as a whole, right? And what we find here is that we're still struggling to get past that 200-day. We had a couple of attempts here, but each and every time the 200-day pocket, these blue lines here, we keep getting shot down. So right now we are coiling in between the 200 week and the 200 day. And really it's going to be a determining factor whether or not we can get above 235 billion, because if we get that, then that's when I really think altcoin dominance is going to start expanding. It's going to be clear that altcoins are trending higher. They're going to start keeping up with Bitcoin, and it'll be time to really start taking some longs, taking some risk in the market. But to be honest with you guys, seeing this here makes me a bit more cautious, or at least not feeling any FOMO. If we take it in really like practical terms, we're at the same place we were at back in June, or back here in July, or back here on a small relief rally here in August that was met with a further correction to the downside. My main point here is that you are going to be able, even if you waited for the break on the 200 day, right? Well, a lot of people would say, oh, you're late to the party, yada, yada. You are incredibly early onto the trend if this is going to revisit back to the prior relative highs, let alone the all-time highs up here at 430 billion, from 485 billion from the last cycle. So we've got a lot of room to go in the event that either of those two scenarios play out. I'm not saying they're guaranteed to do that. I'm just saying that at the end of the day, we should wait for that 200 day to break, and you're going to have plenty of upside if that's the case, in my view. All right, now take a look here at others' dominance. This really puts it in perspective versus where we were back in late September, about a month ago. We were at 10.5% dominance. We are now sitting at 9.3. This is on par with where we were back in August when it comes to dominance. So this tells me that there's still a lot of sell-side pressure, a lot of distribution, a lack of belief in the altcoin space right now because of likely due to the fact that the narratives are not as strong. They're mainly around meme coins. That valuation can rise very quickly, but it can also come down very quickly when insiders start to distribute and they start selling their positions and offloading on people who think they're buying the absolute bottom. So just keep that in mind here. Now, again, I do like seeing, if we just take it here to the weekly to kind of get a more clear picture, right? I do like seeing here that we are on the overall long-term line of support here when it comes to other coin dominance. And as we've highlighted here, either we're going to get our breakaway moment. I'm not saying we have to go all the way up here, but we're either going to start really formulating a trend here soon, or this is likely going to move lower and Bitcoin's really going to steal the show. So this is, again, a very important dynamic to understand here, that altcoins have got to show up here very soon, or we're going to start sounding the alarm bells on really staying away from risk on assets. And that'll play into a big macro topic we're going to discuss later on. All right, but I want to go ahead and talk about some of this individual altcoin plays, right, to kind of get a sense of where things are in the market. Now, while things are obviously moving up in dollar terms generally, especially from where they were back in August, you can see that a lot of the plays, for example, like Fetch, have just been continuing to fade here. Fetch did not hold on the 100 day like we were hoping for, right? Now, again, we didn't build any positions in Fetch, but my point here is that this was a play that we thought, hey, maybe this could be one that really leads in an altcoin cycle. But to be fair, it came down in a big way against the 100-day moving average. And that's not really good to see. It has to reclaim these moving averages now. And considering here, this is definitely, from a overall risk-reward perspective, it's definitely nicer to find this at a discount from where it was back here at 26 or 2700 sats. Getting an 1850 is definitely more favorable. But again, you're buying ahead of time and trying to guess on whether or not you're going to be able to clear through the moving averages, right? Again, if I were to build a position here, I would have like a relatively decent stop, not too far away, around like 1600, 1500 sats, because overall at the end of the day, this is either going to start moving soon or it's not going to perform at all. And the same goes here for render, right? For some reason the moving averages aren't loading here. Let's see, maybe if I switch here to the weekly, we might get that. Yeah, so it seems like there's for some reason that some of the charts on trading have been glitching this morning. But you can even see here on the chart, we went from around the August lows here, we rallied up here towards about 10,000 points, and then came back down here back to the lows. So we're not even setting new highs against Bitcoin, let alone really building a neutral trend. This looks like it's still formulating and maintaining a downtrend. Not a good sign to see, right? So we have it here on the weekly now. And you can just see we're not too far away from where we were back in August of 2023. Pretty much closed all the gains against Bitcoin. Yikes. It's not really good looking. Not to mention, take a look at Ordi, right? This is the Ordinals play, right? Pretty much flat with where it was back in July, but still just got shot down dramatically after it tapped the 200-day pocket. Looking like it might be trying to bounce up here, but the same as what we've seen time and time again. I'd rather wait, pay a premium, pay 20-25% more, and just get in a position when I know that the market's really going to carry it forward. We're not seeing that yet. Take a look at Stacks, another Bitcoin infrastructure play, right? Just riding along that 200 week. Not bad, but not exciting, right? And again, happy to pay a little bit of a premium until, basically I'm going to wait and pay a premium until we finally see us getting above here, above that 200-day moving average. Because when that happens, that's usually when the fireworks light off here, right? There can be some chop along the way, but generally speaking, that's when you get back above the moving averages, confidence is restored. The 21-day is your kind of buoy or support for price, and things continue higher. This has just been in pure distribution mode since back in March. Early exchange listings, insider play, VC backed. You may not think VCs could be in meme coins. They absolutely are. The wealthy bags in the space just totally use market makers to prop this up. And what do you know? It just for months has just been holding up there, leading a lot of people thinking, oh, but maybe it'll break out to new highs. Maybe it'll go to new highs, that I should put all my money into it. When in reality, insiders are slowly dumping on investors. Do not get caught in this, guys. I understand it's right now, it's on the long-term moving averages here, which we're being treated as resistance. It might be turning to support. Look, I'm all cool with making a trade on this if the momentum starts to show up in a big way, but don't be caught holding the bag. WIF has no fundamentals like most meme coins, and it is an insider play. Pepe, maybe less of an insider play. I don't know what you want to call it here, but generally speaking, Pepe still not showing significant signs of optimism. If you look at the Bitcoin comparison, maybe in dollar terms, it looks kind of nice to some people, but we are back where we were back in August. We faded all the gains against Bitcoin, and now we're down below the 200-day. So a lot of these large cap meme coins, or net terms, I would call them mid caps when it comes to their valuations in crypto, but these are the large meme coins behind Doge. These are looking quite weak. I would not be touching meme coins like this that are going to require a huge influx of liquidity to really go on to do some crazy multiples in this cycle. Focus on the small caps out there, the micro cap meme coins that can really easily make a 5 or 10x multiple. And we're going to be watching for those. If momentum returns, there's going to be a lot of those different plays that are just a couple million, tens of millions of market cap that really could go on and rise to the caliber of some of these that are already trading at $1 billion plus market cap. There will be other plays, in my opinion. But take a look at Doge, right? Doge is holding up pretty strong here. It seems like, again, a lot of liquidity has flown back here. I think overall, again, with the kind of relationship between Elon Musk and Doge, again, at the end of the day, it's not so much a fundamental thing, but rather a sentiment play here. And at the end of the day, Doge has been, while it obviously is much more conservative in its returns, is holding up on a price structure better than most meme coins. Again, overall, though, sentiment here for a lot of these major narratives, whether it's DePIN and AI, whether it's Bitcoin infrastructure, whether it's meme coins, overall, the trend right now is not exciting. This doesn't get me excited. I like seeing the early signs of potential optimism, but if you really zoom out on Doge and you really zoom out on most of these plays, what you're going to find is the same picture, that a lot of these meme coins have really not kicked off their big show just yet. There isn't enough momentum for me to get really excited that there's going to be a massive expansion. And I, again, don't mind coming in a little bit late to the party, because similar back to Q1, that's where most of the money is made. That's where you're going to make your really life-changing returns, and it's not difficult to do. You just basically have to generally get the narratives right, be in the market, and then get out when others aren't willing to because they're too greedy, right? So that's the big thing here at the end of the day, that we want to wait for those signs of momentum. The last thing I want to talk about here in regards to altcoins is the large caps. And large caps are also an important sentiment gauge here, because they're kind of the next leg historically. It's not always the case, but generally speaking, historically, after Bitcoin shows signs of optimism, you see a trickle-down effect into the altcoin sector. It usually starts with the large caps. And Ethereum, being the second largest crypto, is really not looking good against Bitcoin. We broke down, we could not get above the 21-day multiple times, and broke down yet again here, even with a ETH ETF. I want you guys to keep that in mind here. This is what we talk about with the ETFs being kind of the ultimatum for cryptos, the last major point of inflows, institutional capital. Everyone's been waiting for it. And we can see here very clearly that we're just moving lower and lower and lower. And some people, of course, will argue, if you take a look, Nick, but in dollar terms, ETH is neutral. It's not that bad. It is kind of bad here, because this is after the launch of the ETF. And there are no significant inflows coming in, at least not enough in order to really sustain price anything higher other than the 200-week moving average, which is really not that optimistic and bullish. That's just like the bare minimum. So I'm not trying to be negative here. I know some people might hold ETH. They might think I'm attacking the project and stuff. Guys, I've been building in the Ethereum community since back in 2019. I love crypto. I love what Ethereum stands for in many ways, and DeFi and some of the more solidified and realistic narratives in the crypto space. But right now, there's just not much innovation right now. There's not much positive sentiment. And that has been the case since back here during this major flush back in August, when there's a huge unloading of Ethereum here. So really, we haven't seen that sentiment shift yet, and we can't try to get ahead of the curve really and try to place bets, because in that case, we're just hoping and guessing. If you do that, make sure you have your stops established, you have risk mitigated, and you have a clear kind of risk reward profile. The next point I want to talk about is Solana, as we're talking about L1 plays and kind of broader infrastructure plays in the crypto space. Again, we can see here as the third largest play in the crypto space, Solana is starting to gain a little bit of traction against Bitcoin, but again, nothing that's really rocking my socks off, so to speak. Again, still below the relative highs here in July, pretty much on par with where we faced resistance in May. It's still well below the relative highs of December 2023 and March of 2024, right? So I think, again, this could yet again be another short-term run-up, gets people excited, more room for distribution for insiders and all the people who got the large stakeholdings in Solana from the FTX bankruptcy holding. Got to be careful about the VCs and insiders here, guys. The other thing as well that you guys should keep on your radar as a kind of a good example here, not to get caught in traps in the market, is SUI. Now, we had talked about kind of watching this one breaking out over the line of resistance. The big thing I emphasized is that essentially what we want to look for is once that break happens, watch what it does in the sense of a pullback. When it comes back, does it come down and make support on that line of resistance? It tried to, but for days, it had an incredibly weak bounce and faded right back down. This is a warning sign for you guys that there are a lot of plays that you're going to hear about that are the next Solanas. You're going to hear about that are X, Y, and Z, this and that. And at the end of the day, they really don't have many new exciting fundamentals. They're insider trades here, where essentially they're propped up here. And essentially after these big expansions, they just unload for months to come. You really don't want to get caught up in that kind of position. These are projects that are already right now, before an altcoin cycle has really broken out, trading at billions upon billions of dollars in their market cap. It is going to be very difficult in a low liquidity, low velocity, and low growth environment like we're in right now in crypto to get the kind of multiples that people are expecting from these plays, like a 5 or 10x. It really, in like net dollar terms, not to mention against Bitcoin for that matter, it is going to be very difficult to find those kind of plays. Again, unless you're buying the absolute capitulative lows like back here in August and, kind of doing these short-term swing trades. You don't want to buy in the short-term euphoria. This leads me to talking again about what you should be focused on, in my opinion. If you are looking at infrastructure plays, you should look for ones that not only do have strong fundamentals, I do believe, but outside of that, at the end of the day, what matters most here is the plays that actually have the market of scale potential, right? That are actually offering something new and have the ability from their valuation range to really go out there and do something crazy like that 5 or 10x, maybe if not more, if they continue to really scale and become one of the larger plays. That's why I definitely recommend you guys, at least at a minimum, keep ALF0 on your radar. Now, I'm not here to just chill the project or tell you guys to go buy it. I do recommend that you definitely check out A0, as they just finally established the token metrics and a cap supply and the inflation rate, which is really good for the token. But beyond that, I want you guys to keep on your radar these plays like ALF0 that are trading at valuations that are below, say, $200 million in market cap, right? That have that ability to really go on and become billion-dollar plus protocols and actually create a lot of value in the crypto space beyond what they've already done. In the case of ALF0, as we talked about in last week's video, there's this recent introducing of the shielding demo on the Common app. The Common, think of Common as essentially the Uniswap or core central AMM of the ALF0 ecosystem. They just recently launched their shielding demo, and it's a great demonstration of what makes ALF0 incredibly valuable. The value proposition of ALF0 is that it is going to be the first major EVM compatible and WASM compatible, or essentially the Cosmos SDK and framework compatible network, to have real built-in privacy, meaning that two of the most popular protocol frameworks, existing applications, can bridge over and be implemented into the ALF0 ecosystem. But beyond that, they can have built-in zero-knowledge technology that's client-side, where essentially on an app like Common, you'll be able to send funds from one address to another without anyone knowing. And this is not, again, so much about the kind of privacy cypherpunk movement of crypto. Of course, you could see it as that if you want, and the value proposition behind that. But mainly, this is around corporations, enterprise companies, traditional finance, and all the narratives we have in crypto finally being able to meet in a sense of synergy, finally allowing enterprise companies to be able to offer integrations with Web3 apps in DeFi, in real-world assets, and a whole range of different areas of crypto or GameFi, and be able to maintain GDPR compliance as well as other privacy regulations for their customers. Not to mention just making sure that you maintain good standards for the data and transactions that your customers may be engaging in with their money. So this is very important. Privacy is not something that is available in Solana. It's not available in Ethereum in a substantial way. And it's not available in a whole range of other L1s out there. So this is going to be a huge deal in my opinion. It is something that you guys should not sleep on from a fundamental perspective, and you should at a minimum keep it on your radar. From like a price action perspective, LF0 has been relatively neutral. It's in what may be an accumulation range here since back in August. But at the end of the day, guys, beyond telling you guys whether or not to trade it or not, you guys know what kind of signs we look for when it comes to price action. I think you should keep this on your watch list. And above all, do research, look into the protocol, see how you can get involved beyond just obviously trading it. And you can also try on testnet, you can try the step-by-step guide to create a wallet and essentially try out these shielded transactions. I definitely recommend you do it. So last but not least, just wanted to say again that they also have the token supply adjustment. They had this in the recent governance vote. You can dive into that as well. I think that's also another valuable piece here for the token long term. All right, last but not least, guys, we got to talk about equities. Now, equities are getting into a very interesting point here because last week, something big happened. Okay, the prior week here, back here technically, the prior week on the 17th, we tapped the 95-year-long line of resistance that is made up of the highs of the dot-com bubble and the roaring 20s, the 1920s, almost 100 years ago. Crazy to think. And we've obviously seen some price resistance here in the near term. Now, that's not something, again, that's got me totally panicking, but again, as I've talked about, this is a very significant line. It's a very significant line. I understand a lot of people are juiced up about AI. I know a lot of people are expecting Bitcoin to go to 90K, or maybe people are well beyond what our maybe optimistic target would be of 90K, and they might think it's going to go to 200K, whatever. And many people are expecting that, for example, maybe a Trump victory in crypto be really good. Maybe there's going to be some changes in monetary policy that's going to stimulate the markets. Above all, guys, I want you all to just be prepared here and continue to watch how price interacts with this level here. The 21-day was able to provide support for the last 3 trading days. We're going to see how markets open up here at the open for Monday. But right now, we have just got to keep in mind here that we are at a very high tail end here for the broader stock market. Do not lose picture. Do not lose the big picture here at the end of the day, because it can leave you getting caught up in euphoria and obviously losing money if things don't play out to the optimistic tail end, right? Now, if we start to clear through this line of resistance, if we're either getting signs that the market is pricing in massive productivity enhancements due to AI, they're pricing in a massive debasement of the money supply, which obviously isn't a good thing, but equities are going to readjust to that as they did during COVID. Depending on what happens here, there could be a slew of factors. It could be a combination of the ones we just discussed as well as others. Once we get a clear monthly breakthrough above 6,000, then maybe we can start to look for some trade setups where we use the 21-day moving average, or for example, the 100-day if we're a little bit more risky, as our kind of stop loss, and we let the market do its thing. We chase really risk-on trades. I don't know if this is really the time to do that. I would be very cautious here, and I don't think you're going to see price easily clear through this level here unless there's really some clear catalyst that's going to lead that to happen. And I don't see it right now. Right, so I'm really playing on the cautious side here. We've had a great rally considering the previous highs in December 2021. We're at 4,800. We're 1,000 points higher here. Right, to put that in net percentage terms here, you're talking about from a high-to-high expansion of around 21.6% in the last 2 years, right? Because the lows were back in October 2022. We're up around 66% in the S&P 500. Not to mention, if you were in the right individual plays like NVIDIA, as well as a whole range of other chip makers, you're up big time in during that period of time, let alone Bitcoin and other cryptocurrencies. So just keep it in mind. When I see altcoins, for example, trading the way they are, when stocks are rallying up here, tells me that the really risk-on tail end of investing and trading is just not there yet. So we'll have to see. Maybe that changes in a week or two. But I want you guys to remain cautious. And it also has to do with what's going on in the bond market with U.S. Treasuries. Take a look here. U.S. 10-year yield popped up to its highest level since back in mid-early July. Right? This is back up to 4.27% in the U.S. 10-year yield. The U.S. 2-year yield also shooting up here to where it was back in August. Huge expansion here. And the Fed has not really stated anything clearly around, increasing interest rates. So what is this telling you here? This is telling you the Fed maybe got ahead of itself, and the market's starting to reprice how much the Fed can cut rates going towards the future. And what this has all led to here is essentially, so far since back in June of 2023, we have moved into a normalized ratio between long-term maturity yields and short-term maturity yields. This is essentially the yield curve that you've probably heard us talk about here, other people. The main point I want you guys to keep in mind here is that as this moves higher and higher here, we are above zero. We are no longer inverted. We have been on inverted here since back in September. The main point I want to emphasize is the more this moves up here, similar back to January 2001, here in July 2007, here in August 1990. This uninversion of the yield curve is your early precursor to a recession. And I want you all to keep in mind that this shouldn't be ignored. A lot of people will forget about it. A lot of people stop tracking it. It's one of the most historically accurate indicators we have. And it doesn't mean that things have to be disastrous. It doesn't mean we have to have a 50% pullback in stocks. But it could mean we get a good 20-30% cool down, a slowdown for some period of time. The number doesn't always go up and to the right constantly. It has ebbs and flows, and we might need a pullback to the 200 week before we really have the steam to continue higher here, especially considering we are on the upper band of this 95-year-long trend line. This 95-year-long channel. And there could be periods, as we've highlighted here on the chart, where it will be a very long time, a decade at a minimum to nearly 3 decades before you get back to those highs again. Maybe that's not the case here. Maybe it would be shorter this time around. Monetary policy dynamics are certainly different. The market is much bigger now. But at the same time, in the logarithmic scale, we've had phenomenal returns since back in 2009. And it may be time for a little bit of a cool down here before things continue expanding. And I don't know if we're going to really be able to return to the massive QE periods we used to be in without ramping up inflation again. So I think those dynamics have also changed too. The easy money era is over. You've got to be smart. You got to be a little bit cynical. You got to be willing to take profits along the way. And you got to focus on where the liquidity flows are going. Because if money isn't flowing, then in that case, you're going to be caught holding dead positions. So I rambled out a good amount here today, guys. If you enjoyed my rambling, consider dropping a like. It's a great way to support the channel, as always. And I hope you guys have a fantastic day wherever you are. I'll see you all on the next video on Monday. Take care, everyone.